Welcome back. You're still tuned into Midcap Radar. Shriram Properties, that is the stock on our radar. The stock has surged more than 40% in the last 1 year. The company in its long-term targets aims to double its sales, triple its revenue and quadruple its profits over the next 3 years. To discuss how do they plan to achieve it and more, we have Murali Malayappan, the chairman and MD at Shriram Properties. Mr. Murali, good afternoon. Thank you so much for joining in. I wanted to understand the longer-term targets is something that the street seem to like as well. For now, I wanted to understand, since Q1 did see some weakness because of that Pune project approval that didn't come through, where are we in terms of approval there? Has Q2 been better than Q1? And are you on track for those 3 project launches that you had indicated earlier as well?
Yeah, absolutely on track with respect to the launches. 3 projects out of which, 2 are in Bangalore, 1 in Chennai, all on track. And as we speak, 1 project already launched and received good success. The other 2 projects, EOI process over, and we should be able to get this done before 30th September. And project launch is on track. Pune project approval still lost mile pending, so it will not happen in Q2, but it is likely to happen in early Q3. So it is on track with respect to all the new projects. For the full year also, new projects is on track for launches. We have close to about 11 projects for the year. And for Q3 and Q4, the project launches are on track.
Okay, so the Pune project, you expect the approval to come by in Q3. What is the revenue potential here, the sales potential, and what would the execution timeline be on that project once approvals do come in?
It is over about 1,000 crore is the overall gross revenue of the project. And project timeline could be about 3 to 3.5 years time completion from the approval timelines.
Okay, Mr. Murali, talk to us about the AIF platform that you have currently with ASK. So what is the current status of that? What has been the commitment so far? And we also understand that there's an early closure over there. So can you give us a sense of what exactly is happening on that particular platform?
It's a 500 crore platform, out of which 2 investments have been done. 1 investment, they got an exit now recently. There is a project in Bangalore. It's a plotted development. The project has done phenomenally well. They just got an exit a couple of months ago. And another project in Chennai, which they have investment in there. They are also exploring, we are exploring together, we can do another 500 crore platform. We are exploring together on, again, investing into the core markets like Bangalore, Chennai and Pune.
Okay. So you are looking at the Kolkata market in a big way as well. That is something that you said in your outlook coming in for the next few years as well. You said Kolkata will remain a key contributor. So I wanted to understand what is the plan here? There is some monetization that you were planning here as well. How big would Kolkata be as a part of your overall pie in the future?
Kolkata, we have deliberately decided that we will not do any addition. The existing project has a potential of about 6 million square feet, out of which close to about 10 million square feet is already under construction now in various stages. The balance will get delivered in the next 6 to 7 years time. Apart from that, we have got quite a lot of land parcels with potential built-up area, which we'll look at monetizing. We'll hope to monetize this in the next 3 to 4 years time. And we are not adding any new project in Kolkata.
Okay. Mr. Murali, you've given a very strong guidance as far as, the next 3-year pipeline is concerned, double sales, triple revenues, quadruple profits. Now, when we talk about the next couple of years, how will the project mix going to look like? Will it largely be driven by affordable housing? You also have significant plans as far as the luxury segment is concerned. So how will the project mix change like, especially over the next couple of years, FY26 onwards? What will be the kind of launches that we can expect?
Currently, last 3 years time, what we have done is mid-market, it's about 67%. It is likely to go up to close to about 75 to 80% in mid-market segment. Next 2 years outlook will be completely mid-market. We have moved away consciously from affordable housing. We were dominant player in affordable housing, but we have consciously moved away from affordable housing. Will be mid-market and mid-premium segment. That will be our focus. Close to about 80% will be in that category, some portion in luxury category, some portion in commercial, maybe a small portion in affordable. So that's where in the next 2 years time we are looking at now.
Okay. Mr. Murali, I was looking at the debt now. You have a platform with ASK around 500 crore rupees. The debt also is something which is used for the future capex that you have. 482 crore is the debt, and it has been increasing. In March 2022, you had 341 crores of debt. What is the plan with debt reduction? What is the breakup of debt from NBFCs and banks, and what is the cost of debt right now?
As we speak, it is at 460 from 482. It has come down to 460 net debt. Net equity ratio is 0.37, is one of the lowest in the industry as we speak today. With respect to the overall debt reduction, as the projects getting completed, whatever the projects what make the debt is sitting there, all the debt is related to only working capital. There is no land acquisition which is happening through debt. Hence, as the project gets completed, this debt will come down. It will become, net debt will become zero of the projects which are getting completed. As we add up new projects, the new project related debt will keep adding up. That's again restricted to only the construction finance. With respect to, sorry, go ahead.
No. So Mr. Murali, I wanted to understand then these new projects that are coming, the cash flows are enough to repay the debt, the cash flows that are expected from these. So what kind of cash flows are you expecting? Because that would be an important number for any investor.
Cash flows not only good enough to repay the debt, we are also likely to generate good, healthy cash flows over 200 crores in the next 3 years' time. So over and above this debt repayment for the current projects.
Okay. Mr. Murali, thank you so much for joining us. Thank you so much for answering all of our questions quite patiently. We'll have you once again, once you deliver your Q2 results, and also we await you launching the Pune project soon. Let's now slip into a short break.